Hello everyone. Today's video is an educational session. The topic of this video is how to set take profit, TP, levels, using Fibonacci retracement. Before diving into the main content, you might be wondering why we should use Fibonacci to set take profit levels. What's so special about using Fibonacci? Here's an example. Suppose the previous trend was a downtrend. The downtrend has reversed, turning into an uptrend. This is because the price has broken through a key resistance level of the downtrend. The price reaches this point. You decide to enter a buy order at the previous high. You place the stop loss, SL, below the key level. Is this buy order's entry point correct? Is there anything wrong with this stop loss placement? The answer is, it's correct, there's nothing wrong with it. So, where should we place the take profit, TP? The safest take profit level is right here, at the nearest key level. However, in this scenario, the risk to reward ratio, RR, is very low, around 1:1 or slightly higher. If you're feeling greedier, you might set it here. Setting the TP here is still valid, but it has a drawback. The drawback is that price rarely moves straight up in one go. It rises, then pulls back, and repeats. Now, suppose it moves like this. This means the trade's holding period will be very long. This can make us feel psychologically uneasy. Moreover, if we move the stop loss to the entry point to break even, the price might pull back and hit the stop loss lightly, and then continue upward, reaching our take profit level. So, now, where should we place the TP to achieve a decent RR ratio, and have the price hit the TP quickly? Using Fibonacci to set take profit is the answer. So, what Fibonacci tool are we using? It's the Fibonacci retracement tool. For those who don't know, this tool is commonly used to measure whether the price pullback has retraced sufficiently. In other words, it measures the pullback wave to determine if it's likely complete, so we can prepare to enter a trade. However, few people use this tool to set take profit levels. For take profit, traders typically use a different Fibonacci tool. However, I use the same tool for everything, to keep things simple, less cluttered, and more effective. Now, let's move to the first step, which is customizing the tool to make it simpler and less visually overwhelming. There are two ways to bring up this tool. The first is by pressing Alt+F. The second, more common method, is to click here and select the arrow to the right. This is the default interface of the Fibonacci tool. It's too colorful and visually cluttered. We don't need all these settings. Let's customize it by double-clicking on it. Now, follow my steps. Remove the unnecessary parameters. These are the parameters I keep. Now, change all of them to white. Next, add two more parameters. Set this one to -0.27. Set this one to -0.62. Color the -0.27 level yellow. Color the -0.62 level red. These colors have specific meanings, which I'll explain later. Now, scroll down. Set the background opacity to 0. We don't need a background at all. OK. This is the interface after customization. Why did I remove those other numbers? The Fibonacci sequence has many levels, like 0.236, I think, 0.382, 0.618, and so on. But for me, the price zone from 0.5 to 0.618 is the strongest zone. When the price retraces to this zone, it's highly likely to stop and then continue in the direction of the main trend. Because it's the strongest, I only keep this price zone. Other weaker zones are irrelevant to me, so I disable them. Now, where did the minus 0.27 and minus 0.62 levels come from? I learned them from other sources. I applied them, tested them, and found them effective. That's why I use them and share them with you. Now, let's look at how to use the tool. This is an uptrend. This is the impulse wave, this is the corrective wave, and this is the next impulse wave. Suppose you've analyzed other time frames, and have a basis to predict that this uptrend will continue. Because of this, you decide to enter a buy order, following this uptrend. Now, the price is undergoing a corrective pullback. This pullback is very favorable. This is the opportunity to enter a buy order to follow the uptrend. So, where will it retrace to? We don't know where it will retrace. It might retrace to the previous high, or it could retrace to a key support level. In this case, the previous high coincides with the Fibonacci zone from 0.5 to 0.618. This is a confluence factor. You believe the price will only retrace to this previous high. You decide to enter a buy order at this previous high. Set the stop loss slightly below to avoid being stopped out. Now we have the entry point and the stop loss point. So, where do we set the take profit? The safest take profit is at the nearest key level, which is this high. But in this case, it only achieves an RR ratio of 1 to 1.5. That's not even 1 to 2, it's very low. Since you predict the uptrend will continue, you want to set the TP further. You aim for a higher level. You extend it further. Referencing historical price data, you set the TP at the next key level up here, achieving a very high RR ratio. But remember, the price rarely moves straight up. It rises, pulls back, rises, pulls back. For new traders, setting the TP too far means the trade is unlikely to hit the TP. There are many reasons for this, like psychological factors. Holding a trade for too long can make you uneasy. Or, if you move the stop loss incorrectly, the price might retrace and hit your stop loss, causing you to break even, or take a small profit, and then the price continues up, which is frustrating. So, in this scenario, for new traders, it's best not to get too greedy. Set the TP closer. So, where do we set the TP? Here, there, or somewhere else? There's no clear basis for choosing. That's where the Fibonacci tool comes in. Here's how to use it. This is the moment we apply the Fibonacci tool. Here's the method. The starting point is the beginning of the impulse wave. The end point is the end of that impulse wave, right here. Now we have two TP levels. The yellow level at minus 0.27 and the red level at minus 0.62. You can set the TP here, at the yellow level, achieving an RR of 1 to 2.37. If you're greedier, set the TP at the red level, achieving an RR of 1 to 3.47. But I recommend setting the TP at the yellow level only. Don't be too greedy and aim for this level. This is also why color the minus 0.27 level yellow and the minus 0.62 level red. Red indicates a higher risk level. Setting the TP too high increases the chance that the price won't reach it. Be less greedy and set the TP here. Once you have a high win rate, then you can aim for the red level. But for now, stick to the yellow level. That's how to use the tool. It's that simple. Now, let's go through a few examples. This is an uptrend. The market moves like this. This is the 4-hour time frame. You may have analyzed the daily time frame and the 1-hour time frame and predicted that this 4-hour uptrend will continue. So, you decide to enter a buy order. Following this uptrend, the price is now pulling back. This pullback is very favorable. This is the opportunity to enter a buy order to follow the uptrend. Now, we use the Fibonacci tool. The starting point is the beginning of this impulse wave. The end point is the end of this impulse wave. Since this isn't a video on trade entries, I won't go deep into that topic. Let's just enter a trade at this Fibonacci zone. From 0.5 to 0.618, set the stop loss slightly wider to avoid being stopped out. For a safe TP, we set it at the previous high. But in this case, it only achieves an RR of 1 to 1.6, which is very low. You predict the uptrend will continue, so you set the TP further to the yellow level, achieving an RR of 1 to 2.6, which is decent. If you're greedier, set the TP at the red level, achieving an RR of 1 to 3.8, but I recommend sticking to the yellow level. Don't be too greedy. And the price, after nearing the red level, reverses sharply downward. You might think, seeing this, to aim for the red level next time. But no, we shouldn't be greedy. Stick to the yellow level. Now, let's move to another example. Overall, this is an uptrend. The market moves like this. This is a key level of the uptrend. This is the previous high. But currently, the price is in a corrective downtrend. The price hasn't reached anywhere significant yet, so we predict it will continue downward. It's highly likely to retrace to this previous high. In this downtrend, the market moves like this. This is the impulse wave, this is the corrective wave, and this is the next impulse wave. We do the same thing. Select the Fibonacci tool. The starting point is the beginning of this impulse wave. The end point is the end of this impulse wave. In this case, the previous low coincides with the Fibonacci zone. From 0.5 to 0.618, you believe the downtrend will continue, so you enter a sell order at this previous low in the Fibonacci zone. Set the stop loss slightly above to avoid being stopped out. So, where do we set the TP? The safest TP is at the nearest key level, this low. This achieves an RR of only 1 to 1.3, which is very low. Since you predict the downtrend will continue, set the TP further to the yellow level, achieving an RR of 1 to 2. At the red level, you achieve an RR of 1 to 3. If you set the TP at this white key level, you achieve an RR of 1 to 3.3. So, where should you set the TP? The safest is here, but that's very low. Choose the yellow level, achieving an RR of 1 to 2, which is sufficient. In the end, the price only reaches the yellow level and then reverses upward, lingering in this price zone. If you were greedy and set the TP further, you wouldn't have hit the TP, and you'd have to hold the trade for a long time, up to 20 days. That's why, initially, we should control our greed. Small profits lead to longevity. This is the guide to using Fibonacci for take profit. Honestly, I usually set take profit at key levels and rarely use Fibonacci for TP. I trade smaller time frames, so I rarely need it. I just monitor candlestick patterns and time frames and take profits at key levels when the RR is sufficient. I've almost forgotten other methods, but for cryptocurrencies, I often take partial profits using Fibonacci because crypto often breaks past highs, leaving no historical data to reference. If you're trading Forex on larger time frames, using Fibonacci for take profit is very effective on larger time frames. If you don't take profits at the right time, the price might retrace before continuing, forcing you to wait a long time. That's all for this video. Thank you, and see you in the next videos.